What up, Hyperchange? Welcome to another episode. Today we are talking about one of the most undiscovered companies in this new digital media landscape and knocking on the door of $1 billion valuation. I am talking about the financial news startup you know as Cheddar. So, who is Cheddar? What do they do? They are an always-on TV network. The future of media, in their vision, is that yes, you will be watching Netflix, Game of Thrones, and be able to blast through a whole season all at once with this on-demand, pre-programmed content. But there is also a huge niche that is being not addressed at all, especially for the millennial segment, which is this always-on, linear, ambient TV that deserves partial attention. Think about while you're in a waiting room, when you're in an airport, when you're getting your clothes on, when you're doing your laundry, when you're getting your kids ready for school, whatever it is, this on-demand, partial attention TV is a huge niche. Think about, wherever CNN is played in a lobby or airport. Think about when you see CNBC on in the background of some office you're visiting. This is the exact type of content use case that Cheddar is attacking. The company was founded by Jon Steinberg in 2016. He was formerly the COO and president of BuzzFeed from 2010 to 2014. He grew the company from 15 to 500 employees. Before that, was working at Google. According to this article I read, which I'll link to, he left BuzzFeed in May 2014 because they were about to sell the company to Disney. They got this close, and then Jonah Peretti, the founder of BuzzFeed, decided to scrap the deal. Then Jon Steinberg left. He went on to be the CEO of the Daily Mail US, which when he left in 2016 to do Cheddar, was growing revenue at 50% year over year. This guy is a thought leader in the new digital media era. He has had some awesome track records of wins, especially with BuzzFeed. And I also am a huge fan of him because he goes on as an anchor on Cheddar and is actually doing the groundwork as one of the hosts on the channel because they're a startup. I love to see the founder leading by example and doing that role. So I just think this is an awesome little story behind this company. Now let's talk about what the business looks like today. Cheddar operates a business tech news channel, which is on from 9 a.m. to 5 p.m. every weekday Eastern time. They have two main studios. One is live on the New York Stock Exchange. The other is in the Flatiron Building in Midtown Manhattan. The company distributes its TV network across a variety of platforms. Not only do they sell it direct to consumer via their website, but that you can also watch it on Sling TV, Amazon, Pluto TV, Twitter. So, all these different avenues of distribution. I've even seen them embedded on Seeking Alpha sometimes. The reason why they've been so successful at distributing their channel to all these platforms is because unlike most of their competition, Cheddar gives their channel away for free and then says, we're gonna keep 50% of the ad load to try and monetize it. I think this is a genius model that aligns the incentives with both Cheddar and their partner company because they both win if there's higher ad rates and engagement, just down to the little niche of how they're running their business. And actually getting the content out there is even new and innovative. According to this article by Digiday, they're getting about 200 million views per month across all of their channels, averaging about 200 to 300,000 viewers per hour. According to this Pew Research report, State of Media in 2015 or 16, which I'm going to link to, CNN was only averaging 517,000 viewers per hour. So Cheddar is already in the ballpark of these major news networks, which is pretty crazy. Now, let's talk about the business in the future. Cheddar is working on some really exciting stuff that I think is going to lay the groundwork for them to get way bigger and eventually the future of all business and tech media. They have a partnership with WeWorks. This is the first thing. They're setting up micro studios in a couple of WeWork locations. I believe they're in Los Angeles and DC to start, where they can have WeWork companies and founders come on and talk about things on Cheddar. This is going to help the company scale their on-air guest experience where they bring on these thought leaders, planning to scale this partnership to 5 or 10 more WeWork locations this year. Additionally, they hired this new reporter from, I believe, Business Insider. I think his name is Alex Heath. He is the Cheddar Scoops guy. So now we've started seeing Cheddar come out with their own original exclusive reports. They had one about some sort of Alexa HomePod competitor that Facebook's coming out with. They were also the first one to break the fact that Snapchat is going to allow its stories to go everywhere on other platforms and be embedded. So I think they need to double down on this. Cheddar Scoops is really fascinating. They're competing with Bloomberg here with breaking, real world exclusive tech news and journalism. Additionally, they have this thing called Big Time News, which is in the works, which is modeled after CNN. It's a real news network. It's going to be on from 6 a.m. to 10 p.m. daily. Done right, this could be bigger than Cheddar's core business tech platform. It's really interesting to see Cheddar start and do so well in this business niche and now have this whole new big news product, which is going to be a CNN competitor that is slated to launch in early 2018. This is a huge growth avenue for the company if they can pull it off. Now let's talk about the company's financials and valuation. According to John Steinberg, Cheddar's on track to pull in $11 million in revenue in 2017. That was up from the original estimate of about $10 million this year. And remember, this is a news network that launched in early 2016. They're only about 2 years old, and they just did $11 million in revenue. So I think that's really impressive. They've raised a total of $32 million from incredible, huge name, top tier investors: Amazon, AT&T, Comcast Ventures, Altice, New York Stock Exchange, Rain Ventures, Lightspeed Venture Partners. Steinberg, in the same Digiday article I'm going to link to, says the company still has $27 million in the bank between cash and invoices. They also claim to have a monthly burn rate of only about $1 million with 90 employees. And if you think about that $11 million revenue number, which is scaling quickly, you know, Cheddar is either about to be profitable or running at break even already. And so I just think that's incredible. This is a super lean operation. In the long run, I think this is going to be one of the most profitable media businesses out there. John Steinberg has laid out a goal to eventually get them to $100 million in revenue in the long term. When I'm thinking about valuing this company, I think they need a price sales ratio of at least 20x on that 11 million number, because I think it's on track to probably double this year at least. And then when you factor in that they could be launching their own CNN competitor, if that's successful as well, I mean, there's a very clear path to getting to 100 million plus in revenue. Some stats I found from that Pew Research report: CNN was projected to do 1.2 billion in 2015 revenue. CNBC was projected to do 733 million in revenue. Fox Business News was 236 million. Bloomberg TV was 197 million. So, you know, Cheddar is going to have the business news competitor, which has hundreds of millions of dollars of potential. Then you have the CNN competitor, billion plus in revenue potential. You know, I think if Cheddar keeps executing the way they have, there is a clear framework for them to get to $1 billion plus valuation, unicorn status. I think they're going to get bought out probably in a year or two by one of these bigger network conglomerates, probably whoever owns CNBC, because they are going to put CNBC out of business. That makes me so happy. I currently would value the company at about 20 times that 11 million in sales, which gets me to a valuation of 222 million. I think if they continue to grow and execute, that's only going to go up from here. That wraps it up for this episode. I'm going to put a link in the description. If you want to find out more about Cheddar, you should definitely check it out. I think they let you watch about 30 minutes or an hour of their program for free. This is Hyperchange. Let me know what you guys think in the comments. I'll see you guys next time. Peace.